Hey guys, welcome to another video. In this video, I'm going to be covering the Edu91 question bank. Okay, so we'll be covering the Edu91 question bank. Before watching this video, I would recommend you to watch this chapter 1 part 1 revision and chapter 1 part 2 revision, and this video basically contains the study mat questions. Okay, so this contains the study mat questions, so you can watch that. I mean, you don't have to necessarily watch it here, but you have to know about the topics that I've covered over here, right? So without any further delay, let's get into it. Okay, so here firstly, in this chapter 1, okay, an audit is an independent examination of financial information of any entity, whether profit oriented or not, and irrespective of size or legal form, and when such an examination is conducted with a view to expressing an opinion thereon. Okay, explains stating clearly how a person conducting this task should take care to ensure information that financial statements would not mislead anybody, right? So what they've asked is how does the auditor ensure that the financial statements won't mislead anybody, right? So we'll just start with it. Okay, so I'm just going to be writing it, and like some of them I'll write it and then move on to the next question, or I'll just highlight over that, like if I feel that it's a repeated question. The first measure is that the accounts must be prepared. The accounts must be prepared in accordance with the entries. Okay, in accordance with, or the accounts should be drawn up, or accounts must be drawn up as per their entries or their relevant entries. Okay, next, secondly, the entries must have sufficient and appropriate evidence, right? Must have sufficient and appropriate evidence. Right? Next, no entry should have been omitted, right? No entry should have been omitted. Next, that financial statements should show true and fair view of the financial information or the events of the entity, or events of the entity. Okay, next, I think there was something relating to clear and unambiguous. One second. Clear and unambiguous. I think they're talking about the evidence or the entries. Let's just see one second. Right here, accounts must have been drawn up with reference to entries. Entries must be adequately supported by sufficient and appropriate evidence. The same thing we've written. None of the entries must have been omitted, right, in the process of compilation, and the information conveyed. Okay, so the information conveyed by the financial statement is clear and unambiguous. Okay, and the financial statement amounts are properly classified, described, and disclosed. And lastly, it should provide a true and fair picture. Okay, so I think we have written this. This also we had written. I think these two were a bit I think I just skipped over that, right? So information, clear and ambiguous info in the info that is shown. Oops, let me just close this. The info that is shown should be information in the financial statement should be clear and unambiguous. And one more point is that the amounts in the financial statements should have been properly disclosed, classified, right? Disclosed, classified, and right, I think that should be enough. Okay, so here firstly, we obviously, since they also started off with the following, the definition of an audit, we can also write that in the answer. Okay, so we can write audit is an independent examination of the financial information of any entity, irrespective of size or rather any entity, whether profit oriented or not, right? And irrespective of size or legal nature, okay, or size or legal form. Okay, next, and such an examination, and when such examination is conducted with a view to express an opinion thereon. Okay, so audit is an independent examination of the financial information of any entity, whether profit oriented or not, irrespective of size or legal form, and when such examination is conducted with a view of expressing an opinion. Okay, next, I think that is sufficient. Okay, next we'll move on to the next question. This largely buys that of study map. Okay, I've covered in the previous video. So basically what he says is he relies on the financial information and thinks that this audited financial statement gives him and he's absolutely satisfied the money invested by him is safe, right? So obviously that is wrong. What did we discuss yesterday? We discussed that market price of share are dependent on various factors, right? And due to the inherent limitations of audit, audit cannot provide absolute assurance, right? So therefore here obviously the conclusion is that Lalji guy is wrong, right? Lalji is wrong in assuming that audited financial statements indicate that his money is safe, right? Or whatever conclusion they are asking, you just have to provide that conclusion, right? Money is safe, right? Very simple, right? We'll move on to the next question. Okay, CAN, the auditor of SR Limited, the auditor expressed his opinion on the financial statements without ascertaining as to whether the financial statements as a whole were free from material misstatement or not. In your opinion, whether CAN has complied the objectives of audit considering the applicability of the relevant essay. Okay, so basically here they're basically asking you to quote essay 200. Okay, quote the objectives of the auditor, right? So once we'll just see what the next question is also. Okay, C.A. Jatin is the auditor of JP Limited. The auditor expressed his opinion on the financial statements without ascertaining as to whether financial statements as a whole were free from material misstatement. Explain with regard to essay 200. Again, here they've given the essay also, the number also they've given. Okay, so it should be fairly simple. Another way this question has come is, explain the overall objective of an independent or of an auditor as contained in the SA 200. Basically, all of SA 200, whatever you can remember about SA 200, you'll have to write it over here. Okay, next. Mr. Z, an auditor. Mr. Z, an auditor of the company, Different and Capable Limited, for the financial year 23-24, explain to the audit team members about the objectives of an independent auditor in accordance with relevant standard in auditing. Explain those objectives. Again, basically all of these questions basically want you to write SA 200. Okay, so we'll just start off with the answer, right? So what is SA 200? What is the title of SA 200? This is the third question, right? SA 200 is, it is the overall objectives, or what is the acronym for this? It is UYAKASA, correct. Overall objectives of an independent auditor and conduct of audit as per relevant essays, relevant standards on auditing. Okay, clear? Next, so this is what they wanted to right, this is only the title, right? Next, what else did they want? As per SA 200, you can write as per SA 200, the objectives of an auditor are as follows. Okay, so firstly he has to obtain reasonable assurance that the financial statements are free from material misstatement, whether due to fraud or error. Okay, whether due to fraud or error. Okay, next, and he also has to ensure that the financial statements are prepared in accordance with the applicable or the AFRF, okay, applicable financial reporting framework. Okay, next, what else did it require? It required you to report on the financial statements and communicate as per relevant essays, relevant standards on auditing, or as required by, communicate as required by relevant standards on auditing. Okay, let's just see what they have given. Okay, so here SA 200, overall objectives of an independent auditor in conducting of an audit of financial statements. The overall objectives are: obtain reasonable assurance whether financial statements as a whole are free from material misstatement, whether due to fraud or error, and thereby enabling the auditor to express an opinion on whether the financial statements are prepared in all material respects in accordance with AFRF. Okay, I think we missed a few words here, but let's try to bring it as close. Right? Obtain reasonable assurance that financial statements are free from material misstatement. I think that line is correct, right? As a whole, right? Financial statements as a whole, right? So we'll just as a whole are free from material misstatement, whether due to fraud or error, right? And here it is actually thereby enabling the auditor to express whether whether financial statements in all material respects, in all material respects are prepared in accordance with the applicable financial reporting framework. And then lastly, it is to report on the financial statements, right? Report on the financial statements and communicate as required by the SAs in accordance with the auditor's finding. In the given case, the auditor has expressed his opinion on the financial statements without obtaining reasonable assurance. Okay, so or rather, he has not obtained reasonable assurance whether financial statements as a whole are free from material misstatement or not. So thereby, it can be concluded that the auditor did not comply with the objective of the objective of audit as stated under SA 200. Right? Perfect. Next. My objective here is to get the answer as close as possible to the answer key, right? So because that is what gets us the marks, and I feel like wherever we make the mistake, I feel like we should try to recall it, and as we recall it, and if there are any mistakes, we should correct it immediately and make sure that the correct answer is memorized, or the correct answer is in your head. Okay, next. The N Motors is a leading Indian automobile manufacturer with many offerings across commercial, passenger, electrical vehicles. The company is pioneering India's electric vehicle transition and enjoys considerable advantage in one of the fastest growing automotive markets. Okay, now this G&R Associates have been appointed as its statutory auditors for the financial year 22-23. J&K are newly appointed audit assistants in the firm and are part of the engagement team constituted for the purpose of audit of M Motors Limited. Okay, next. However, they are confused about what such an audit tends to achieve. They perceive audit as a guarantee against possible errors or frauds in the financial statements. Do you agree with the perception of both of the assistants? In this context, outline the objectives of an independent audit conducted in accordance with the standards on auditing. Right. So here, basically, they're asking you to comment on what the audit tends to achieve. Right. So what the audit tends to achieve is written in SA 200 itself, which is the overall objectives of an independent auditor. So firstly, again, SA 200 overall objectives of an independent auditor and the conduct of an audit in accordance with the standards on auditing. Okay, so firstly, it is to obtain a reasonable assurance about whether financial statements as a whole are free from material misstatement, whether due to fraud or error, thereby enabling the auditor to express an opinion on whether the financial statements are prepared in all material respects in accordance with the applicable financial reporting framework, and to report on the financial statements and communicate as required by the SAs. Okay, next. Now in detail, each word they have explained. Okay, so auditor's objective is to obtain a reasonable assurance, right? It is to obtain a reasonable assurance whether the financial statements are free from material misstatement. Okay, reasonable assurance is to be distinct. So this you'll have to write meaning of reasonable assurance, right? So basically, you just have to dive into all these keywords over here. What does reasonable assurance mean? Reasonable assurance means it is a high level of assurance, but it's not absolute. Okay, so absolute assurance is a guarantee that the financial statements are free from material misstatement, but here it gives only a reasonable assurance that financial statements are free from material misstatement. Okay, next you'll have to dive into what material misstatement means. Okay, so material, what does material mean? Material means either individually or jointly, it is capable of influencing the economic decision of its users, or the economic decisions of the person relying on such financial statements. Okay, what is misstatement? Misstatement is the difference between required, or the ACPD amount, classification, presentation, disclosure required by the financial reporting framework, required by AFRF, and what is actually and the actual presentation amount, classification, presentation and disclosure, right? So this is a misstatement. The difference between the amount, classification, presentation and disclosure as required by the AFRF, right, and the actual amount, classification, presentation and disclosure. Okay, so that is misstatement. And next, we can just give 2 or 3 points each for fraud and error. Like saying fraud is intentional, it is harder to find. The risk of not detecting is very high when it comes to fraud, and when it comes to error is unintentional. Errors are easier to find as there is no high amount of concealment that has taken place by the management, right? So the management has not taken drastic measures to conceal the fact that error is there, right? And risk of detecting is substantially lower than compared to fraud, right? Next, thereby enabling, so express an opinion, right? To express an opinion in that the financial statements are prepared in all material respects with the applicable financial reporting framework. What is applicable financial reporting framework? I think that also they've given here. Have they given that? No. Okay, so whatever is the financial reporting framework that is applied to the presentation and preparation of the financial statements. Okay, so that is the applicable, and that financial reporting framework must be acceptable for the size of the entity and for the legal form that it has taken. Okay, and lastly we'll see, they've given with regard to reasonable assurance. Yes, they've explained misstatements, and they've explained the fraud and error part, right? Obtaining reasonable assurance. Okay, that's it. The opinion is reported and communicated as required through a written report. Okay, done. Therefore, the perception of both assistants is not proper. Okay, so next is the auditor of the financial statements does not seek to provide guarantee that the financial statements, he obtains only a reasonable assurance that the financial statements are free from material misstatement. Okay, next, professional judgment is essential to the conduct of a proper audit. Okay, so what does a professional judgment mean? Professional judgment is the application, right? Application of relevant training, knowledge and experience. Okay, application of training, knowledge and experience within the context provided, right, or application of relevant training, knowledge and experience in order to make informed choices or informed decisions that are appropriate in the circumstance. In order to make informed decisions that are appropriate in the circumstance. Okay, so that is the meaning of professional judgment. And again, they've discussed about essay 200, again relevant essay for that particular professional judgment. And then the auditor shall exercise professional judgment, where and all he will exercise the professional judgment. Okay, so this is fairly simple, right? So basically, whatever topics that you will learn in audit, you will have to tell that the professional judgment is applicable there. Okay, so or rather you can use the framework of an audit. Okay, so framework of audit, you can use this to write wherein all professional judgment is used. Okay, except for engagement, right? Except for engagement, everywhere it is used. So firstly it was engagement, we'll just ignore that. And then planning, it is used in audit planning. You will use professional judgment when it comes to planning. And then setting materiality, right? And when it comes to assessing or rather when it comes to conduct of or performing his risk assessment procedures, and when it comes to the response to the risk, right? When it comes to response to the risk, right? What is the response to the risk? Basically, the nature, timing, and extent of further audit procedures. Okay, and then when it comes to determining whether the evidence that is collected, whether evidence is sufficient and appropriate, and lastly, while obviously reaching a conclusion, right, he will have to use his professional judgment. Okay, the auditor shall use professional judgment in planning and performing the audit of financial statements. Professional judgment is essential to the proper conduct of an audit. This is because interpretation of relevant ethical requirements and the essays and informed decisions is required throughout the process of audit and cannot be made without the application of relevant knowledge. Okay, so wherein all will he use this? He will use it in materiality and audit risk, nature, time, and extent of audit procedures, whether evaluating whether sufficient and appropriate audit evidence has been obtained, right? And evaluating the management judgments and drawing of conclusions. Okay, I think except for management judgment we have covered everything here. Okay, we'll just add management judgment also here. Okay, so management judgment. Okay, next now scope of audit. Okay, so here we just read the question. Okay, so Good Deeds Limited is engaged in the business of recycling waste from dumping grounds of Municipal Corporation of Indore to usable manure. Okay, it is in this way also helping to make the city clean. During the course of audit by Zoa and Zoa firm of auditors, it is observed that the company has received a notice from Central Bench. Okay, this is a study mat question actually, which I had covered yesterday in the previous video. Okay, like if you don't know which I'm talking about, it is okay, this didn't load, right? Okay, this is covered in the study mat, right? Okay, so basically they are telling that see, the auditor points out that this notice and like the imposition of hefty fines is not stated in the notes to account of the financial statements, and the company tells that the auditor is going outside or going beyond the scope of audit. Okay, so basically we have to answer what the scope of audit is. Okay, we'll have to write what the scope of audit is. Okay, what is the scope of audit, right? So here, what is the scope of audit? I think I just covered it anyway. Okay, even though I had done it yesterday. Right, scope of audit. What is in the scope of audit? Firstly, it covers all aspects of the financial statements. Okay, all aspects of financial statements, right? Next, what else does it cover? What else is within the scope of audit? It is to ensure reliability and sufficiency. Ensure reliability and sufficiency. See, in the financial statements. Okay, how will he ensure this? How will he ensure the reliability and sufficiency? Through by checking or rather through checking or through analysis of the accounting system, right? Accounting system and the internal control. Okay, here accounting system, you can also write that accounting system includes the notes to accounts. Accounting system includes notes to account. Okay, and lastly the third point is relating to the presentation and disclosure. Okay, the scope of audit is within the checking the presentation and disclosure. Firstly, the auditor must ensure that ensure adequate disclosures. Okay, he must ensure adequate disclosures, and he must ensure that there is compliance with the statutory requirements. Next, that the financial statements provide an accurate summary. Okay, the financial statements provide an accurate summary. And next, that the auditor has to evaluate, or rather basically you can just write evaluation of management's judgment. Okay, so this is basically what is within the scope of audit. Okay, so firstly he should ensure that all aspects of the financial statements are covered. Okay, so the scope of the audit is all aspects of the financial statements, and he must ensure reliability and sufficiency in financial statements or in financial reporting, right? How will he ensure reliability and sufficiency? Through analysis of the accounting system and its internal controls. Okay, and the last point. Okay, so there are 3 points, and the last point is relating to presentation and disclosure. Okay, so he should ensure adequate disclosure, ensure compliance with statutory requirements. He should ensure that the financial statements are providing an accurate summary. Okay, and lastly, evaluation of the management's judgment. Okay, so he has to evaluate the management's judgment. So this is within the scope of audit. Okay, so here obviously when it comes to presentation and disclosure, here 2 points are there. Okay, presentation and disclosure, that then there is an ongoing case, right? An ongoing case that may cause hefty penalties, or that may that the company may incur hefty penalties. Okay, and secondly, the accounting system, right? Analysis of accounting system and the notes to accounts. So these are also part of the scope of audit. Okay, so basically we can write that as the notes to accounts forms part of the accounting system which is within the scope of audit, and the presentation and disclosure of any contingent event or any if the auditor deems that such a case requires such a case or a presentation and disclosure about that particular case ensures that there is adequate disclosure, then it falls within the scope of audit. So here the company is wrong. Okay, company is wrong, saying that company's contention that it is outside the scope, it is beyond scope of audit. Scope of audit is wrong. Okay, so it is obviously wrong. Okay, we'll just check what the answer is there, what answer they've given. Okay, so here scope of audit, the coverage of all aspects of the entity, right? Audit of financial statements should be organized adequately to cover all aspects of the entity relevant to the financial statements being audited. Reliability and sufficiency of the financial information, right? The auditor should be reasonably satisfied with the information contained in the accounting records and other sources, right? And this other source data should be reliable and provide sufficient basis for the preparation of financial statements. Next, proper disclosure of financial statements. The auditor must ensure that the financial statements contain are adequately disclosed or adequately discloses relevant information, right, and complies with the statutory requirements, whether they accurately summarize the recorded transactions and considering the management's judgment. So proper disclosure in the financial statements is well within the scope of audit. So basically that is simple. Okay, so they've reached the same conclusions we have reached over here. Okay, next, moving on to question number 7. A huge fire broke out in Noida. KT plant assets comprising building were insured from the branch manager. Okay, so basically this is also from the study mat question. This is already covered yesterday. Okay, I feel like I've spent enough time talking about this study mat questions. Okay, Like I'll just let you read it in case you haven't watched the video. Okay, you can just pause it and go through it here also. Okay, I'll just move on now. Okay, next. Choosing appropriate accounting policies in relation to accounting issues is the responsibility of management. Do you agree? Okay. So here obviously it is the responsibility of the management. Okay, whether appropriate policies are taken, right, or choosing, or whether the appropriate policies are chosen, right. So there is obviously the responsibility of the management, and the role of the auditor lies in the evaluation. Okay, so the auditor does not choose the appropriate policies. Okay, he only evaluates whether the management's judgment is correct in choosing that particular policy, and whether that policy has been applied consistently throughout the preparation of financial statements. Okay, here the auditor evaluates management's judgment in the financial statements preparation, including selection and consistent application of the accounting policies. Okay, next. An audit is distinct from investigation. Okay, so obviously yesterday and in the other revision videos that I put, I discussed what an investigation is, right. So investigation is a critical examination of the accounts with specific purpose. Okay, so this is one of the keywords, right. Or if they've said specific purpose, or if they're asking you to start an or conduct any procedures to find out whether something has happened or not. Okay, there is obviously a preconceived notion that is called a preconceived notion. Okay, meaning that you are starting with the thought that there is something wrong. Okay, so you are searching to find that particular thing that is already wrong. So you know there is something wrong and you are finding out what is wrong. Okay, but in audit it is not that. Okay, there's never a preconceived notion. Okay, so there's no wrong. We don't assume that there is a wrongdoing. Okay, so we are there to show that we are there to exclaim, or we are there to express an opinion that the financial statements are free from material misstatements, whether due to fraud or error, right. But we are not there to find out if there are any particular wrongdoing, right. It is not, and it's very broad. Okay, audit is very broad, whereas an investigation is very focused and narrow, right. We'll see what is given out here. Okay, so audit is a critical investigation is a critical examination of the accounts with a specific purpose. Okay, so there is a specific purpose here, meaning with that purpose only the investigation is conducted. Okay, so in audit there's no specific purpose, there's only the overall objective of finding or obtaining the reasonable assurance and expressing an opinion that the financial statements are free from material misstatement, whether due to fraud or error. That is audit. Okay, but in investigation these procedures are applied only with respect to with a specific purpose in mind. Okay, next. The objective of the audit is to obtain reasonable assurance whether financial statements as a whole are free from material misstatement, whether due to fraud or error, right. Next, audit is never started with a preconceived notion about the state of financial affairs, or about any wrongdoing, or about any wrong having been committed. The auditor only seeks to report what he finds in the normal course of examination of accounts. Okay, next. It is quite possible that sometimes an investigation results from the prima facie findings of an auditor. Okay, it may happen that the auditor has given some findings of serious concern. Such findings may prompt for calling an investigation. Okay, next. The auditor should decide whether relevant information is properly disclosed in the financial statements. Explain with proper reference to scope of audit. Okay, again start with the scope of audit, right. Okay, basically they've asked only relating to disclosures, right. So what was relating to the disclosures here? That one second. Yeah, when it comes to presentation and disclosure, there are 4 points, right. So what does he have to evaluate when it comes to presentation and disclosure? He'll have to see whether there is, or he has to ensure adequate disclosures, right. Adequate disclosure. Okay, next, conduct of compliance with statutory requirements. Okay, so ensures that compliance with statutory requirements, and he has to also ensure that the financial statements provide accurate summary. Okay, provide an accurate summary of the accounting records. Okay, accurate summary. Next, evaluation of the management's judgment. Okay, so obviously management would have exercised their judgment with respect to accounting policies and the application of said accounting policies. So we will have to evaluate whether they have been properly chosen, or and whether they have been consistently applied throughout the financial statements or throughout the preparation of financial statements. Okay, we'll move on to the next question, right? Next, when it comes to benefits of audit. Okay, benefits of audit is fairly easy, right? Next, we'll just see what the question requires us to do. Okay, here, REG is a proprietorship firm engaged in the manufacturing of textile and handloom products. It sells its finished products both in domestic as well as international market. The company is making total turnover of 30 crores. It has also availed cash credit of 5 crores from Canara Bank. The proprietor of the firm is worried about the financial position and is under the impression that since he is out of India, therefore the firm might run into losses. He approaches the CA about the advantages of getting his accounts audited throughout the year so that he may not suffer due to accounting weaknesses. Okay, advice regarding the advantages of audit. Okay, so this is very direct question, right? This entire thing was completely useless information, and we just have to write the advantages of getting accounts audited. Now we'll say see what other kind of what other way they've asked this question. Okay, the chief utility audit lies in the reliability or reliable financial statements on the basis of which the state of affairs may be easy to understand. Apart from this obvious utility, there are other advantages. This is also very direct. Both of these are pretty direct, right? Very direct questions. No problem, we'll just see the next. Okay, that's it, right? Only two kind of questions. Okay, so basically when it comes to advantages of audit, it is a very direct question. Okay, so it is very direct question. Okay, so what are the benefits? What are the benefits of audit? Firstly, it provides a high quality information. Okay, it provides high quality information, right? And then it safeguards the interests of the investors, right? Safeguards investors' interest. Okay, it is used for ascertaining government liabilities. No, I'm just writing the keywords, okay, so that we can remember the keywords, and then we'll dive into the text that's given there. Okay, it is used for ascertaining government liabilities, right? It is useful while providing the financial statements to lenders, right, or when obtaining money from lenders, right? Next, it provides it helps find any fraud or error, right? And then it ensures adequate control measures are taken. Okay, ensures adequate control measures are taken. And lastly, it keeps a moral check on us. Okay, so how was this how was this this entire answer memorized? Was through the process of relating it to the relation between a child and their parents. Okay, so here the parents give high quality information. It safeguards our interests. Okay, so I mean it as in our parents give us high quality information, they safeguard our interests, okay, they protect us from liabilities, right? But we commit fraud or error with them, right? And so they ensure adequate control measures and they keep a moral check on us, okay? So this is how like sir had asked us to memorize this question, right? So it's pretty simple, right? So they give us high quality information, safeguards our interest, right? And they protect us from liabilities, and then but we commit fraud and error, so that's why they put adequate control measures and they keep a moral check on us, okay? Next, just see what is given here, okay. Audited accounts provide high quality information and gives confidence to the users on which they are relying is qualitative, and the outcome of an exercise is carried out following the auditing standards recognized globally, okay? Next, in case of companies, the shareholders may or may not be involved in the daily affairs, right? So an independent mechanism is required so that the financial statements are qualitative and reliable. So the interests of the investors are safeguarded by audit. Okay, it keeps a moral check on employees, right, from committing frauds or errors. Audited financial statements are helpful for government authorities to determine tax liabilities. Okay, and financial statements can be relied upon by lenders, bankers for making their credit decisions. Audit may lead to may also detect fraud or error or both, right? Audit reviews the existence and operations of control measures, right? It is useful for pointing out deficiencies. Okay, very simple. Okay, next, this was in the ICI study material, so I'm just going to promptly skip it. Okay, I'm just going to zoom out so that you can see the answer that is given. Okay, you can pause and see it. Okay, I'll just move on to the next question. Okay, again, this was also in the ICI study map, which I've already covered in the previous video. Okay, I'll just zoom out so that you can see the answer. Okay, next we'll move on to the 14th question. Okay, next, so here the auditor is not expected to and cannot reduce audit risk to zero, and therefore cannot obtain absolute assurance that the financial statements are free from material misstatement due to fraud or error. This is because there are inherent limitations. Okay, so when it comes to inherent limitations, obviously, like I told yesterday or in the revision classes, that you'll have to start with a base. Okay, before you start the main inherent limitations, you'll have to start with a base. Okay, firstly, stating that audit provides only reasonable assurance. Okay, audit provides only a reasonable assurance. Okay, audit provides only a reasonable assurance. And next, audit evidence, right? Audit evidence is only persuasive in nature, or only persuasive, not pervasive, persuasive, rather than conclusive, right? And next, the internal controls of any company, internal controls provide only a reasonable assurance. Okay, internal controls provide reasonable assurance. Okay, as it is maintained, as it is designed, implemented, maintained by the management itself. Okay, next, lastly, that no amount of or that the inherent limitations can't be overcome by increasing the extent of audit procedures. Audit procedures. Okay, so these are the 4 points that you have to write before starting the inherent limitations. And what are the 5 inherent limitations? Right, inherent limitations of audit. Okay, what are the 5 inherent limitations? Firstly, it is nature of financial reporting. Next, it is the nature of audit procedures. Next, audit is not investigation. Okay, it is not an investigation. Right, and the 4th point is that what else was there? Nature and audit procedure is not, and timeliness and future events. Right, timeliness and relevance of information, and lastly future events. Okay, now let's dive into each and like single meaning of this. Okay, so what is, I mean, the internal content that we can write here. Okay. Nature of financial reporting. Obviously here there's a lot of management judgment that is involved, right? So management judgment, when management judgment is involved, like the application or interpretations are very subjective. Meaning it changes with each person. So the auditor may have a different interpretation, the management may have a different interpretation, right? So these are subjective. And the internal controls are also designed, implemented and managed by the designed, implemented and maintained by the management or TCWG. So that also gives reasonable assurance, right? So it is not giving absolute assurance there, right? So that's why there is nature of financial reporting being one of the inherent limitations of audit. Okay, next, nature of audit procedures. Nature of audit procedures, 2 words that are supposed to immediately come to your head are practical and legal limitations. Okay, so it is not practical to apply audit procedures to all of the transactions, or basically it is not it is not practical to apply audit procedures to 100% of the transactions. Okay, and when it comes to legal limitations, we do not have the power to conduct searches. We do not have power to take sworn statements, right? So these are the legal limitations. And next, after this, there are 3 management related limitations. Okay, management related reasons. Okay, either the management is not giving information, not giving any documents, or the management is giving fabricated documents. Okay, next, or the management has entered paper transactions or paperless transactions for related party transactions. Okay, so to enter into related party transactions, they have entered into or they have not left any paper trail. Okay, so audit is not an investigation. Basically, you just have to differentiate between audit and investigation. So what did we find out about investigation? Investigation is starts with a specific purpose. Okay, investigation is conducted with a specific purpose, and unlike audit, where there is no preconceived notion there is no preconceived notion in audit. Okay, but in investigation there is a preconceived notion. Okay. And in investigation is more focused and narrow, right? But audit is broad and wide. Okay. Next, timeliness and relevance of information. Basically here there are only 2 points. What are the 2 points? Firstly, that as time passes, the relevance of information reduces. Okay, the relevance of information info declines basically. Okay, and there needs to be a balance struck. There must be a balance between reliability and cost. Reliability and cost of the information. Okay. Next, future events. The auditor does not express his opinions on the, or does not conduct audit of future events. Okay, so future events are not taken into consideration while coming up with the opinion about the financial statements. Okay. Does not rely on, or rather does not basically it doesn't take future events into consideration. Okay, because audit is a, let me just write this. Auditor does not take future events into consideration. Okay, and secondly, that, or what else is there? Yeah, audit is only relating to the historical financial information. Okay, not prospective financial information. Okay, so since it is based on historical financial information or about the events that have already occurred and the transactions that have already been entered into, future events are not considered in an audit. Okay. We'll just see what they've given out here. Right? Auditor is not expected to and cannot reduce audit risk to zero, and therefore cannot obtain absolute assurance. Okay. That the financial state. Okay. This is because there are inherent limitations, and then they've written inherent limitations. Okay. The nature of financial reporting, right? Preparation of involves many judgment by management. Okay, so preparation of financial statements involves judgments by management. These judgments involve subjective decisions, and there is a degree of uncertainty. Okay, could have added the fact that there is a degree of uncertainty also in the answer, but it's okay. Okay, next, auditor may not be able to obtain absolute assurance. Okay, fine. Next, nature of audit procedures. As soon as I say audit procedures, what are the two words that are supposed to come into your head? Practical and legal limitations. Okay, on the auditor's ability to obtain audit evidence. Okay, auditor does not test all the transaction, does not check all the balances, right? Because it is not practical to check all the balances. That's what we discussed, right? Management may not provide complete information, or the management may provide fabricated documents, right? Or they might enter into related party transactions also. Okay, next, not in the nature of an investigation. Audit is not an official investigation, therefore auditor cannot obtain absolute assurance. Okay, next, timeliness of financial reporting and balance between benefit and cost. The relevance of information decreases over time, and auditor cannot verify each and every matter. Therefore, a balance has to be struck between reliability of information and cost of obtaining it. So this balance has to be struck, right? This has to come as it is. Okay, next, future events. Future events may adversely affect an entity. Adverse events may seriously affect an entity's ability to continue its business. Okay, basically what we have to see is this future events is not considered by an auditor, and it has a significant effect, right? Or it might adversely affect the entity's ability to continue. Okay, next, there are practical and legal limitations. Basically, this, I think this was in the ICI material also. I've covered this. Okay, never mind. You just have to write the nature of audit procedures. Okay, so you have to remember that practical and legal limitation come in nature of audit procedures, right? And then you have to ensure that you've written all the audit procedures. Okay, or rather the inherent limitations relating to the nature of audit procedures. Okay. Next, the auditor carries out his work by obtaining evidence through performance of audit procedures. Okay, again same thing, they're asking about the practical and legal limitations. So auditor does not test all the transactions, he forms an opinion by only testing samples. An example of practical limitations is the auditor's ability to obtain audit evidence, right? Management may, okay, so when it comes to legal limitations, management may not provide completed information. There's no way the auditor can force any information, or the management, he cannot force the management to provide him with some information. He can only request. Okay, he is not provided with the required information, he can only report, right? This is the legal limitation. Okay, we can also write that auditor does not have the power to conduct search. He cannot conduct searches, or he cannot take any sworn statements, right? Next, nature of financial reporting is in itself. Okay, basically we just have to write this part which I discussed. Okay, nature of financial reporting. Okay, basically what we had seen earlier, like with the full thing, we just have to split it into multiple different points. Okay. Okay, so here when it comes to nature of financial reporting, it involves management judgment. Management's judgment can be subjective, okay, or that judgment is subjective, and involves a degree of certainty. That is one we forgot, right, to write degree of certainty. Degree of certainty. And the internal control is designed and implemented by the management, and that's why internal controls give a reasonable assurance. Okay, that is the nature of financial reporting. Okay, so that is what they've given over here. Okay, question number 17. Okay, preparation of financial statements involves many judgment by management. These judgments are maybe subjective decisions and involve a degree of uncertainty. Okay, once the premises for conducting an audit is that the management acknowledges its responsibility for preparation and presentation of financial statements, and for devising suitable internal controls. However, such controls may not have operated to produce reliable information due to their own limitations. Okay. Therefore, nature of financial reporting is itself an inherent limitation. Okay, next, interdisciplinary nature. Okay, basically this is audit and in the last it was audit and accounts, audit and law. Okay, basically how both of them are interrelated. Okay, both auditing and accounting. So firstly, when it comes to auditing, obviously accounting is related to the financial statements. Financial statements cannot be prepared with a thorough knowledge of accounting, and both are closely related, right? So that's the first point. Both accounting and auditing are closely related. Auditing begins when accounting ends, right? So auditing begins when accounting ends. It requires that the auditor must have a thorough and sound knowledge of generally accepted principle, right? And what else did we read in the material? We also this line was very important as well. A thorough knowledge, or an expert knowledge of accounting. Knowledge of accounting is sine qua non, right? Meaning second to none, right? It is mandatory for the auditor to have a expert knowledge in accounting. Okay. Next, assurance engagement. Okay, when it comes to different types of assurance engagement, basically, let's read the questions. The management of exotic tours and travels limited requests its auditor Raja & Co to provide. Okay, this is an ICI material. I have already covered this in the previous video. Okay, this is there in the ICI material. It is then the previous video right now. Okay, I'll just tag it up here. Okay, so in this, if you just click on this card right here, you'll be able to see something over here. Okay, I would have tagged it. Okay, kindly watch that first. Okay, now this is also from the ICI material. This is also covered. Okay, next, assurance engagement. Again, this is also covered in the ICI material. Okay, it's covered in the previous video. Okay, kindly check it out. This is also part of the ICI material. Okay, kindly check it out from the previous video. Okay, next. KST Limited is engaged in manufacturing business. It appoints CAT to provide an assurance report on its financial statements prepared on the basis of historical financial information. The characteristic of such engagement is that it involves gathering of sufficient appropriate evidence on the basis of which limited conclusions can be drawn by the practitioner. Identify the type of engagement. Okay, So basically we just skimmed through the entire thing, but we just go through that again with a little bit more detail. Okay, so what and all is relevant here? So they want an assurance report, okay, on the financial statements, right, based on the historical financial information. Okay, so historical financial information can either be only of two types: either it's an audit or it can be a review, right? We will find out which one it is now. Okay, the characteristic of such an engagement involves gathering sufficient appropriate. Okay, both audit and review require sufficient and appropriate evidence. Okay, so it must. Next, on the basis of it, limited conclusions. Okay, this is the keyword that differentiates the question. Okay, it gives us limited conclusions. Limited conclusions is given by review. Okay, so limited conclusions is given by review. So here the kind of engagement that they're talking is that of a review. Okay, so here when it comes to review, you get limited conclusions, right? It is also called as a limited assurance engagement. Upon that, it involves lesser number of procedures compared to an audit, and it provides a lower level of assurance. Okay, next, qualities of an auditor. Okay, I think we had discussed this in the previous video. Okay, there are only 1, 2, 3 more questions. Okay, this is from the ICI study map, which I've already covered in the previous video. ICI study map. This last one's okay. So only 2 questions by the looks of it. Okay. So here obviously the qualities of an auditor is very simple, right? Must be tact, he must exercise caution, he should exercise firmness, he should have good temper, integrity, discretion, industry judgment, and patience and clear-headedness. Okay. Next, he must have highest degree of integrity, must hold a position of trust and have basic human qualities, and he must have knowledge of an expert. Okay, because he's critically he's called up to critically review the financial statements. Okay, it is useless for him to attempt at this task without having the necessary knowledge. Okay, next, he must have an exhaustive knowledge of accounting. Okay, and it is sine qua non. Okay, meaning it is 100% required. Okay, next. Okay, standards on auditing apply only in audited historical, whereas standard on review engagement apply in review of historical financial information. Explain in detail giving examples. Okay, basically you have to explain the difference between audit and review. Okay, standards on auditing apply in audit in case of historical financial, which gives a reasonable assurance. Okay, whereas review is only a limited assurance engagement. Okay, here historical financial information means financial terms, or rather information expressed in financial terms in relation to any particular entity, derived from its accounting system, about its economic events and about its economic conditions and circumstances at the point in time in the past. Okay, next, audit and review are different terms. Okay, so audit is reasonable assurance, and the objective is reduction in the assurance engagement risk to reduce the assurance engagement risk to an acceptably low level. Okay, however, risk is in limited assurance engagement, and objective is a reduction in assurance engagement risk to an acceptable level. Okay, here it is an acceptably low level, and here it is acceptable in the circumstance of the engagement. Okay, depending on the kind of assurance that it requires. Basically not a very high level of assurance. Okay, it is not giving a very high level of assurance, it is giving a lower level of assurance as required in the circumstance. Okay, now basically they've just written on the standards on auditing, right? The short note on standards on auditing, I think there's a short note on. Okay, so here standards on auditing have been issued on a wide spectrum of issues, but not limited to. Basically they've just written the essays over here. Okay, relating to independent auditor, audit documentation, planning, identifying and assessing risk of material misstatement, audit evidence, sampling. Okay, basically all this you have to write. Okay, I think that's it. Yeah. Let's check if we have left anything. I don't think we've left anything. Yeah. Okay, done. So this concludes chapter 1. Okay, so chapter 1 is done. Is done. Okay, tata, bye bye. Tata, bye bye. Okay, be sure to check out the other videos also. Okay, so